Naveen Kulkarni also is with us. Naveen, 35 to 40% is the rough volume estimate that, we can decipher back of the envelope calculations. What do you make of these numbers? And do you think that them having gained the 150 basis points market share has done well for them? What's your call on the stock now?
Yeah, so overall, this is a blowout quarter for Asian Paints, considering the volume growth is a very, very strong number, much higher than what we were expecting. Even EBITDA numbers are very good, very much stronger than what we were expecting. In fact, the margins are also better than what we were expecting. Profit growth is, of course, at least 20% higher than what we were penciling in, right? So overall, extremely strong set of numbers from Asian Paints. And on top of that, the gain in market share is the icing on the cake, right? So there is nothing, I would say, that to choose in terms of which is not working for Asian Paints at this point in time. Of course, this is a very, very structural, long-term positive. Very, very strong set of numbers, I would say.
Okay. Abneesh, I wanted your sense on the margin trajectory, because this quarter was when input costs were high. Now we are seeing input costs soften. Plus, you're of the opinion that the market leader is going to continue gaining market share. In that scenario, what is the kind of margin trajectory you're expecting? What do you think would be the exit rate for FY23?
Yeah, I think they should go back to their peak margins by the end, given they have taken strong price hikes and we have started seeing commodity deflation everywhere. Palm oil is now at a 13-month low. I will not be surprised if a lot of the raw material of Asian Paint in the coming month also correct very sharply from here also. So definitely, I think we should also be cognizant of two more things. Rupee depreciation, that is adverse because most of the raw material is imported. Second is there is a 2 to 3 month of lag. A lot of companies have built up inventory given there was a concern that crude will go to 200. So let us take that into cognizance. But your question, FY23 and FY24, we see peak margin band coming back. So we definitely see very strong margins in FY24 if there is no more geopolitical risk. But as of now, the probability seems low.
Well, we'll await the management commentary on that and, the way demand is likely to pan out going forward as well. We also have Amnish Agarwal, who's the head of research at Prabhudas Lilladher, joining in. Amnish, unequivocal beat for Asian Paints. It's a big move that we're seeing on the stock as well. It's well off its all-time high, but at the same time, valuation is not comforting. A couple of points that, we'd like you to focus on, or your thoughts here. These numbers are good. They're gaining market share. The trajectory for the next couple of quarters, if the raw material prices stay stable, looks good as well. But then thereafter, there is a lot of supply coming in the industry. So to that extent, how do you view a long-term investment in Asian Paints?
Okay, so you see the main hindrance or the factor here to be considered is what Grasim will do once they enter full-fledged into the paints market. Now, if you look historically on a, consolidated basis, except in the years where raw material prices were too low, they used to have 41-42% kind of a gross margin. So I won't be surprised that if Asian Paint settles for 1 or 2% margins lower than what they have been making in the last 5-7 years. So that is a strategy which Asian Paints can, I would say, follow very easily. So in my sense, looking at Asian Paints going back to 21-22% EBITDA margins, that might not actually suffice, at least in the near to medium term. Now, as far as your long-term investment in the stock is concerned, you see Asian Paints will be a survivor. Even if Grasim comes into picture, they go aggressive, they try to gain market share, then Asian Paints, by virtue of its scales, by virtue of its market share, product depth and width, it will definitely be a winner. There is absolutely no doubt. But if Asian Paints goes aggressive to save its market share, to save its turf, then the smaller players, regional players, and even I think the weaker players among the large ones, they will also be at risk. So from that viewpoint, I think given the current valuations, Asian Paints re-rating looks slightly difficult. But yes, the company will continue to do well otherwise.
Well, that explains why, Asian Paints, while it is doing well, usually what would happen in a non-Grasim entry scenario is that Asian Paints' good performance would reflect in the stock prices of all the other paint companies as well. We have seen a bit of a spike in Berger's share price, but it is still under pressure, not as much as the kind of gains that we're seeing on Asian Paints. So Asian Paints has moved to the high point of trade. Berger Paints has spiked a little, but has still been muted because the street believes that the larger player out here has more market share to gain. At the same time, will be a survivor in times when we will have some big challengers coming in too. We were referring to the management commentary out there, and they've spoken about good performance in their home improvement business too. Earlier, the management had said that home improvement could triple from here in terms of its contribution to the revenue. Abneesh, do you have any sense of the kind of value that you would give to their home improvement business at some point as well, once it becomes about 8 to 9% of their revenue?
Yeah, I think that is clearly going to happen. If you see even in FY22 annual report, they have said that the waterproofing revenue has recently doubled. Their kitchen and bath business, if you see, they are setting up second facility. So in waterproofing, currently we have Pidilite as a strong player, and then there is space definitely for Asian Paints to be a very strong number 2. So I would say that this will address any concern of Grasim, because Grasim, if you see, will enter maybe after 5-6 quarters. But in consumption, we know it takes a lot of time. So I think the P multiples of Asian Paints will go back to the peak because of the diversification which Grasim is doing. And also Indonesian arm has also scaled up well. So I think Asian Paints should not be seen as a pure deco company. It has 3-4 other drivers which will address the Grasim derating, which can happen for Berger, Kansai, Nippon. Nippon is not listed, but Kansai, Akzo, etc.
All right, take your point, Abneesh. Thanks a lot for joining in. So that is the quarterly performance of Asian Paints. It was a good quarter that the street was expecting this time around from the paint leader.